Welcome to the New York Outlook for Wednesday, the 13th of December 2023. Starting off with the economic calendar, as you can see in the London session, we had British GDP, and that was negative, essentially meaning that for the rest of the London session, we could only short and not long, which was fine. However, we had to be quite cautious and fade the news accordingly. Coming into the New York session, starting off with the session open, we do have PPI. Given that it's not as significant as something like GDP or interest rates, or NFP for that matter, we can trade through it, leave trades open through it, allow trades to be triggered by the news. However, upon the news release, we have to manage our positions by either closing them should it be adverse to our trade position, or if it is in line with our trade position, then we could leave it open. However, we will have to consider the news release, but what I would say is by the end of the London New York cross, I'd close any positions. It's optimal time for closing positions, in fact, especially given the federal funds rate news. Whatever the news is, we'll then fade it accordingly. Obviously, if it's neutral, you can trade in the direction suggested by your technical analysis, and if it's positive or negative, then obviously you want to trade in that specific direction. To be honest, I anticipate that actual and forecast will be quite will be agreed to each other. So yeah, I guess the point I'm trying to make is, even though that may be the fact, you often do have those spikes, and given those spikes, you probably want to trade after the news and not during the news. So what I'll do going forward is jump into the 4-hour GBPUSD chart. As you can see, nothing too significant has happened since the London session. We have come down, but that's primarily because of the negative GDP for the British pound, which suggests that we should short GBPUSD. However, it's got to make sense in the context of what's been happening in the technical analysis sense. Given that there's reason to trade both directions, and although there is reason to short, there is also reason to long. And in terms of reason to short, you can see that we've pretty much taken out all the IRL on the 15-minute and then also on the 5-minute, which was taken out quite recently. What we do have to keep in mind is the fact that we recently validated the pro-trend secondary leg with this change of character, which thus invalidates the secondary leg for the pullback phase. As a result of this, any shorts during the London session was effectively invalidated and longs were on the cards, perhaps anchoring it to today's extreme and yesterday's low of today, or yesterday's high of today and low of today would be another valid idea, potentially entering like so and allowing this to be the liquidity in the leg. However, your news release would prevent you from taking this long, and ultimately the loss that would have came from a long in here. Yeah, and now essentially what we've done is we've broken the secondary leg extension points, and we probably need to make sense of this, because what this has essentially done is extended secondary leg for this pullback phase. However, like I mentioned, because of the fact that we've taken all the IRL, and this being the loss of point of supply, trading against the pro-trend primary leg is essentially a barrier that we can't trade against, and thus even though the secondary leg is extended, it doesn't mean too much, as we still can't short, at least not until we are able to build new IRL. Yeah, which I guess at this point looks highly unlikely. The other point to then make is the fact that, we have reset the secondary leg, which now means a reaction to this pro-trend primary leg can create and validate a new pro-trend primary leg as such. and yeah, we can trade accordingly. In terms of the 15-minute, this would be the level we'd need to break to validate a secondary leg on the 15-minute. But in terms of the 5-minute, we can effectively already create that new secondary leg pro-trend phase high of the day. Sorry, this is the London-based low of the day. Then on the 5-minute, you already have your 5-minute chalk right here. Like I said, we're not too bothered about pullback phase secondary legs, as those are completely invalidated at the moment. Again, we have to be cognizant of the London lull. And as you can see, the secondary leg was validated by the London lull. So what we do need to do is wait for the New York Open. And in addition to that, we have to consider the London range, which is this London range, and of course we'd need one side of the range to be liquidated in order to validate trading from it, which essentially means the current secondary leg is not valid to trade from not at the moment anyway. I think this will ultimately mean that we'd wait for PMI news and then try and fade the move accordingly. But yeah, at the moment, taking any entry is probably not wise. Yeah, essentially that's my outlook for New York. I think longs are certainly on the cards. I don't see how shorts could make sense right now, especially given that we are trading against pro-trend OBs, and the signs of the pullback phase LPOS failure. So in all honesty, I'm more inclined to shorts for the New York session, and I don't think that longs will validate it. Sorry, I'm more inclined to longs for the New York session, and I don't think shorts will actually validate themselves, because in order to validate shorts, we will need IRL to build, and whilst I guess you can say the secondary leg has extended itself, the only option for validating more IRL is your 5-minute. So you'd have to say that 5-minute doesn't create a secondary leg, and then try and find a chalk to actually trade from. But since the 5-minute does in fact create a new secondary leg, that idea would be completely invalidated. Yeah, that's a summary for the New York session, and we will chat again for the end of day review.